SPX6900 is the success story of the year. Many altcoins went up because Ethereum is getting bought up, pushing up many altcoins with it, but SPX6900 outperformed. The question is why and how much longer can this rally last? Let's have a look at the demand and supply dynamics. Let's try to figure out using on-chain data where the price is headed from here. Now I'm quite proud to have covered SPX6900 very early on this channel. I publish videos regularly. That video came out 312 days ago and it performed pretty much according to average. The average video is this gray zone here in the background, and that particular video is the line in blue. The recent update, published a week ago, again performed pretty much according to average. And so, of course, the camera quality has changed over time. This is the first video, this is the recent video, but also the price has changed, right? We went from 10 cents all the way to $1.77, an increase of 1,600%. Now, some people might say that that's because Ethereum went up as well, right? All of this additional capital that hits the market pushes up all assets, but SPX6900 did outperform. Have a look at this chart over here. This is the SPX chart relative to Ethereum, and we've seen an outperformance of 150%. But what we also see in this chart is that there's quite a bit of volatility from the top here to the bottom here. So over the span of only 2 months, the token sold off by more than 70%. The overall trend is still bullish, but we are coming from a top. And the question is, are we going to hit the floor first? Are we going to see a drop of more than 30% again? Now, this is the performance relative to Ethereum. This is not the US dollar price. So when Ethereum suddenly doubles and SPX6900 goes up by only 60 or 70%, we will also see that underperformance. The token is now the 4th largest trending token on the Ethereum chain. Now, it's not just listed on Ethereum now, we've also got quite a bit of supply available on Solana, but still the vast majority of supply is on ETH, and here we've got 26.8 million worth of liquidity. The only tokens with more liquidity that are also trending is Ethereum itself, Pepe, and the Chainlink token. Chainlink recently having announced a buyback program. That's why the price is rallying here. We have a bit over 46,000 holders on chain, on the Ethereum chain of SPX6900. And the token distribution is quite interesting. There are some tokens that have been moved to other chains via a wormhole. So that's now 15% of the supply. And there's also a good chunk that has been burned, right? Those are at a dead address. But then also centralized exchanges are getting involved. Here is a Kraken wallet, here is a Maxi wallet. But really, the dynamics on chain aren't really that impressive anymore. They used to be impressive, there used to be a lot of buying, but that buying has stopped. There's all that liquidity on chain, but the liquidity isn't used much. On the left side, we see the number of small holders. So that's now wallets that have at least 500 SPX6900 tokens. As said, in total, there are 46,000 holders, but only 17,000 of them have at least $1,000 worth of the token. Now in the middle, we go at 10x in minimum holding. So it's now 5,000 tokens. There's only 5,600 such wallets. On the right, another 10x. So that's now $100,000 worth of the token. There's only a bit over 1,000 wallets that have that amount. We can clearly see the massive adoption by retail at the end of 2024, but that now has stopped since beginning of the year. The same is true for medium-sized retail, and the whales, they're even selling since beginning of the year, or at least they're declining in their numbers. The number of buyers and sellers isn't declining that much though. We tend to stay relatively elevated. I believe that's mainly because of arbitrage bots. More on that in a second. There are many more returning users than new users that interact with the token on a given day. And that's because the vast majority of price discovery does not happen on the Ethereum chain anymore. It happens on the centralized exchanges and over there on the spot market, but even more so on the bets on the price, on the perpetual futures market. Check this out. In the last 24 hours, we saw 18 million worth of trading volume on the spot market on Gate.io. We also have a bit of trading volume on Uniswap and on Meteora and Orca. But when we add this all up, it's maybe 11 million or so of trading volume. On the perpetual futures market, we've got more money that moves hands. Here, 72 million worth of trading volume happened in the last 24 hours. So really, the price discovery happens on the perps, not on the spot market. Traders buy SPX 6900 as a bet with leverage on the perpetual futures, and then arbitrage bots balance this out with the spot market. That's why the numbers of buyers and sellers is still relatively elevated, while the number of holders didn't really change much over the last months. And so here's the activity on the perpetual futures market. Most people are betting on rising prices, so the funding rate is positive. There are more longs than shorts, but the open interest has gone up massively. And here's the problem with open interest. Open interest measure of how many bets are currently on the price. So if there's a lot of bets, there's a lot of short-term capital in the market. Now, why do I say short-term? It's because perpetual futures tend to be not that long-term in nature. People just bet with perps on an asset to get short-term price exposure because the long-term financing costs tend to be pretty high for perpetual futures. People don't want to have a lot of slippage, they want to have a lot of liquidity, and for short-term trading, using perpetual futures is more efficient. But for long-term holding, it's better just to buy spot. And so when the open interest is going up on an asset, that shows that short-term leverage is going up. And that then has also a rollover effect to the spot market, right? As open interest declines, the spot market tends to follow as well. And we have seen a peak in open interest at the end of July of this year. This is now coming down, and so is the spot price. The trading volume on the perps is still relatively elevated, but still the tendency is rather down. And there is a balance in terms of liquidations because volatility isn't yet too high. But probably when we're going down very quickly. Movements to the downside tend to happen faster than movements to the upside on average. The fundamental question really is, does it make sense to take on the risk of buying SPX 6900 over Ethereum, for example? How much more upside is there really long term? Because here's an overview of meme tokens across all chains, and SPX 6900 has now a market cap of 1.6 billion. Could it double potentially to 3.2 billion? Could it triple? Rather unlikely, then it would already beat Pepe. A 4 or 5x, I think, is not very realistic. And again, the question is this the perfect time to enter, given that we have already peaked 2 months ago and that we are now declining, right? We are rather now facing negative momentum. And the downside, as already described before, is a bit over 30%. Buying at those levels probably makes more sense, especially given that open interest has way more room to potentially deflate further from here. Now, this market is great for some, but not so great for others. People that bought Bitcoin, they're close to all-time highs, but most people that have a diversified altcoin portfolio are actually down. Because here's the problem. Returns tend to concentrate in just a few assets. Yes, there are a few outliers that do outperform Bitcoin, but the vast majority, especially of the smaller altcoins, they tend to do much worse. The altcoin market as a whole, since the beginning of 2022, so in the last 3.5 years, underperformed Bitcoin by 74%. And that's just the comparison of market caps. It's not the comparison of prices, because that's even worse. Because the altcoins tend to have an expanding supply in terms of tokens, and that expansion in supply tends to depress prices even more. Have a look at this here. This is my favorite example. This is Balancer relative to Ethereum. That's just on a linear scale, but on a logarithmic scale, it looks very similar. We just have continued underperformance. And the reason for that is simply more and more tokens hitting the market. Either the insiders are selling, the team is selling, the early investors are selling, the users of the platform are selling, maybe because they get some incentive token that they can then distribute. It's all kinds of stakeholders that tend to get tokens over time. And this is not just true for Balancer, this is true for the majority of altcoins that tend to do worse than Bitcoin. And so we can actually flip this around. Instead of buying the altcoins, instead of trying to find the needle in the haystack, the one altcoin that does better, we can flip this around. We can bet on most altcoins underperform Bitcoin. Have a look at this. This is Bitcoin relative to Balancer. So we go long Bitcoin, Ethereum, and Solana, and we go short the bad altcoins. Then we can get performance like this. A very nice constant growth chart that is backed not just by hype, but by the fundamentals, simply the insiders cashing out. This is going to stay a valid driving force of altcoin prices for a long time. I'm actually making money with that strategy already for close to 4 years. So my performance is this line here in black, and if I had just dollar cost averaged into Bitcoin and done nothing else, I would have only gotten the light gray line in performance. So we don't have to get the 10x or 100x altcoins in order to do better than Bitcoin. This relative valuation here, right? It went up in the last year by roughly 300%. And so I did make a slight change in how to approach those relative valuations. In the early days, I was borrowing something like Balancer, right? I would take out a loan in Balancer, denominator in Balancer, and then I would swap this against something that I'm bullish on, let's say Bitcoin and Ethereum. And I would just play this relative valuation. The issue with borrowing and lending platforms is that we can't add too much leverage and that we can't really manage our risk with stop losses. On top of that, the asset selection that we get with borrowing and lending platforms tends to be rather low. But with perpetual futures, we can trade many more options. And so I started trading perpetual futures with those relative valuation bets myself, and I did this experiment for 2.5 months. And during those 2.5 months, the performance was very impressive. I started with 40k and moved this to close to 60k again, just in 2.5 months. And I'm sharing all of my trades, right? For example, over here, this was a short on Pengu relative to Solana that I then had to close just a few hours afterwards because Pengu just crashed. And our community made good money with that. Now, many people are scared to learn such a strategy because it's more complex than just buying a meme coin, right? We are going long one thing, we are going short another thing. It seems quite complex and it seems like there's risks that are hard to understand. But that's why I created separate tutorial videos on just that topic. You can just watch those tutorial videos and then learn the trading yourself. Now here are a few trades shared by our community, and it's really about risk management. It's really about setting yourself up relative to other altcoins. Now in theory, this looks all good, right? I made money with this, not just short term, but also long term. But the central question is always, will this apply to anybody that's trying to learn the strategy? And I think that's actually possible. What I will do is when you join this membership here, right, the premium membership, I will share my current favorite trade. And if that favorite trade does not lead to profit after 1 month, then I will refund you 100% of the membership fee. The fee is currently $125 per month. The target is that you become a winning player very quickly. So while all of those tutorials are useful for the long term, at the very beginning, you just have to watch 2 of them. And that's using perpetual futures on Hyperliquid and risk management with relative valuation bets. After you've watched those 2 videos, I will share my favorite trade. You just execute on that trade based on what you've learned over here. And there's a very good chance that with a chart like this, you will be in profit after a month. Again, we are playing the fundamental dynamics of the market, the token inflation, and the fact that most altcoins underperform Bitcoin, Ethereum, and Solana most of the time. Now, I was thinking about this. How can I make this even safer for the people that don't want to watch the videos, that don't want to set up the trading themselves, that don't want to do the risk management themselves, that simply just want to provide capital? Let's say you've got a lot of capital, but you don't have a lot of time. For those people, I've set up a copy trading capital pool. So you can simply provide money to that pool and then automatically execute any trade that I'm doing as well. The copy trading feature is available for everybody that's on the annual membership. So you're also saving $250 per year on that membership. But the main feature is the automated copy trading, where you can get this return. And this has launched 2 weeks ago. And so far we are up 4.7%. And the very first days when I set this up, I didn't yet trade anything. And so that's why there's no trades, why this is going sideways. That's why the APR is actually lower in this estimate than what we're actually achieving. I hope to get this long term above 50%. It was above 50% when I traded myself. Now we are moving more capital, so the APR can decline. But the target is at least 50% per annum. And so you can run the numbers for yourself, whether or not it makes sense for you to join the annual membership for premium. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.